Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into Kenvue's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kenvue, the world's largest pure-play consumer health company, has just released its Q3 2024 results. Despite a slight dip in net sales, there are some interesting developments in their financial performance and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Kenvue reported net sales of $3.9 billion, a slight decrease of 0.4% from last year. However, they achieved an organic growth of 0.9%. John, can you elaborate on these figures?
Absolutely. The net sales decline is primarily due to a 1.3% foreign currency headwind. However, Kenvue managed to achieve a 0.9% organic growth, driven by a 2.5% value realization from pricing and mix, despite a 1.6% volume decline. This indicates that while sales volume decreased, the company effectively leveraged pricing strategies to maintain growth.
And what about profitability?
Kenvue's gross profit margin expanded by 100 basis points to 58.5%, thanks to their global supply chain efficiency initiatives. Adjusted diluted EPS came in at 28 cents, slightly down from 31 last year, mainly due to increased brand investment and a higher effective tax rate.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Kenvue's operating income margin decreased to 16.8% from 18.1% last year. What factors contributed to this?
The decline in operating income margin is largely due to increased brand investment, which offset the benefits from gross profit margin expansion. Additionally, the interest expense was $96 million, and the effective tax rate increased to 33.6% from 25.1% last year, impacting net income.
What does Kenvue's outlook for 2024 look like?
Kenvue expects net sales and organic growth towards the low end of their 1.0 to 3.0% and 2.0% outlook, respectively, due to a projected 1% currency headwind. They reaffirm their adjusted EPS guidance of $1.10 to $1.20, reflecting continued productivity and efficiency gains.
Strategic initiatives and market position. John, Kenvue's CEO, mentioned the View Forward initiative. How is this impacting their strategic direction?
The View Forward initiative is a key driver for Kenvue, focusing on productivity and efficiency. The savings from this initiative are being reinvested into their iconic brands, which is helping them gain market share in self-care and drive growth in essential health. They're also laying a strong foundation in skin health and beauty, where they're seeing early signs of recovery.
How does this position Kenvue in the market?
Kenvue is leveraging its strong brand portfolio and operational efficiencies to maintain a competitive edge. Their focus on reinvestment and strategic growth areas positions them well for sustainable and profitable growth in the consumer health sector.
Risks and challenges. Every company faces challenges. What are the key risks for Kenvue?
One significant challenge is the high effective tax rate, which increased to 33.6%. Additionally, there's a 1.6% decline in sales volume and a 1.3% currency headwind impacting revenue. The increased brand investment, while beneficial for long-term growth, is also a short-term pressure on margins.
How should investors view these risks?
Investors should consider these risks as part of the broader strategic picture. While there are short-term pressures, Kenvue's focus on efficiency and brand strength could mitigate these risks over time, supporting their long-term growth strategy.
Key takeaways. In summary, Kenvue's Q3 2024 results show a company balancing short-term challenges with strategic investments for future growth. With net sales at $3.9 billion and a gross profit margin of 58.5%, they are well positioned in the consumer health market. Their adjusted EPS of 28 cents and reaffirm 2024 EPS outlook of $1.10 to $1.20, reflect their commitment to efficiency and brand strength.
Indeed, Kenvue's strategic initiatives and market positioning are key strengths. While there are challenges, their focus on long-term shareholder value through reinvestment and efficiency gains is promising.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kenvue's performance in the comments below.